If you're new to purchasing a home or you've had a home for a while, but you're trying to get the insurance figured out and you're not quite sure what all these coverages mean, what's this coverage B and D and all of these things. Today we're going to go into a little bit more in depth on what a typical home policy looks like. Now I'm going to use our example because we're in the state of Michigan. That's going to give us kind of the best fit for our state. Granted, this does fall to most of the states out there, but this is geared mainly for our audience, which is a Michigan-based audience. The first part is coverage A, and A is called a dwelling. So whenever you purchase a home policy, there's a couple ways you can buy it. If it's for you personally, it's called an HO3 or an HO5. Essentially is your house, like it's your personal ownership, you're going to live in it, it's going to be your home. If you're renting the house out to other people, it's just called a dwelling. We're going to lean more towards the personalized buying versus the dwelling. That'll be a different video, but there are other options that come with that policy. The way that the homeowner insurance policy works is that your dwelling is the coverage for the physical location. Keep in mind, insurance doesn't cover land, so we're not counting the land value, we're only counting the structural pieces of the house, the dwelling. And that counts for the roof, the outside, the inside, anything that is the foundation. All of those pieces of the coverage is going to be for the dwelling or the coverage A. The common way to calculate the dwelling cost is based on what the cost of materials are. So in our state in Michigan, it used to be a couple years ago where it was about $180 per square foot, but it's averaging closer to that $200 range per square foot because of the inflation of lumber and all of the cost of material. Apart from that, if you do have some extra features, you may have crown molding, you might have a jacuzzi tub, you might have a 3-season porch, a very large deck on the back. All of these additional pieces may increase that cost of square footage. If it's more of a custom-built home where you have the granite countertops, the upgraded materials, now you're looking closer to that $220 to $250 per square foot. For an example, let's say we have a 2,000 square foot home. If it's $200 per square foot, we've now got a $400,000 rebuild or reconstruction cost. So your dwelling coverage would be that $400,000 coverage. That may or may not be enough depending on what your loan or your value of your home as far as the rebuild cost is, not the value of the home as a value. If you purchase the home, odds are you're going to buy it less expensive than it would cost to rebuild it. If they're rebuilding the house, there's a lot of stuff that goes into it. It's removing materials, getting everything back, putting all the money back into it. We'll get a little bit further into that in the video here in a moment where we get into some of the extra coverages because there are some pieces that might benefit you in this scenario. That leads us into coverage B, which is other structures. Pretty simple to understand. It's anything that's not attached to the house. So if you have a shed, a fence, a patio that's away from the home, sometimes it's a pool or a above ground pool that's not connected to the house. Those pieces are covered under the B coverage, the other structures. Now, what typically happens, you'll see on almost every policy it defaults in most cases to 10% of coverage A. So if your house is $400,000 rebuild, you're probably going to have $40,000 worth of coverage B, the other structures. With most companies, they won't let you go below that, but there are some companies, if you don't have other structures or don't plan to have anything, you can go down as low as 2%. It just depends on what the scenario is. This is where we get into a little bit of a tricky situation. So in our agency, what we've found is that sometimes there's outbuildings that are not in good shape. Every once in a while, you get a leaning shed or a barn that's about to fall apart. Most companies will take everything as one full view and say, we do like this or we don't like this. If you're working with an agent that knows what they're doing, they may be able to exclude that other structure if need be. So keep that in mind that it's not a deal breaker in every case. You just have to have the right company that will allow you to exclude that separate building. By the way, if you are in Michigan and you are looking for home insurance, I'll put a link in the description below. We do home, auto, and lots of other policies. Feel free to check it out. We work with a whole bunch of companies, so we have a really good fit in most every situation. If you are interested in that, I will put it in the description below. Otherwise, let's take a look at coverage C. That's going to be your personal property. That's your couch, your shoes, the table, anything that you have that's valuable. There are a couple little things that can't be covered in certain situations, like paper. If you have a note on them that you think is priceless, then there's no value that an insurance company can give to that. So keep that in mind that not everything falls under that coverage, but just about everything that you own will. There is something that I recommend that everybody does. It's an additional coverage, and I'm going to skip saving it to the end because if you do the personal property, always make sure that you do what's called full replacement cost. The two different ways that you can do it is having the value that's today. And if you bought a couch, let's say 10 years ago, even if you brought it at a garage sale, you probably paid a few $100s, maybe even $800 for the couch. Today, if you were to buy that exact same couch in the store, it might cost you $3,000. So when you have a claim and you don't have that replacement cost, you're going to get the $800 value. Versus if you have full replacement cost, you're going to get whatever the value of that same or close-like item is today. That $3,000 couch, you're going to get the $3,000 versus the $800. Same thing goes for your shoes and the table and all of the personal items that you personally owned. It's worth it every single time to have the full replacement cost added to that policy. That leads us into coverage D, which is called loss of use. So imagine you had a fire in the kitchen and it's going to take 5 months to rebuild. You've got to move out of the house and have the whole place fixed and updated and all of the things that need to happen. But now you have to pay for living expenses. You probably have to rent a hotel for the first week until you can find somewhere to live. Even if you're living with family, there's cost expenses that you have with that. And maybe a family member needs some extra cash for you living there. Gas, water, food, all of those things are expenses. The loss of use, otherwise known as additional living expenses, is what they're going to pay for you to live while that's being fixed. Sometimes it costs more in gas to drive to work because you have to drive further. Maybe you have to go out to eat more often. Someone has to come over and mow the lawn when you're not able to get there because you're at a different location. So those add up pretty quickly. Make sure that you have at least some loss of use added on your policy so that if you do have a loss, you're not stuck paying the bill of all of the additional costs that you're not aware of. That's where we lead into coverage E, which is personal liability. That's probably one of the most important pieces for a home policy. Imagine getting sued for any specific reason. That's where this comes into play. Liability, just like for your car insurance, where we talked about in our Insurance 101 on auto, it protects you in case you injure someone that you're liable for. Well, in a home, you have friends over. Things happen. Anything that happens, and technically when you're out of the home, people can go after your home policy because it does technically cover you in different situations. For example, let's say a friend comes over and they're helping you cut up lemons. They're making dinner with you. They cut their finger, they need stitches, it's $12,000 for the whole medical bill. You don't want to pay that, but technically it's your home and you're liable for it. Or if they tripped on your shoes and fell down the steps, you left the shoes out and now you're liable for that. Those situations can cost tens, if not hundreds of thousands of dollars. The best way to look at what you should carry for that is to make sure that you have enough policy coverage, enough liability, that if someone was to sue you, they would look at you versus your insurance and say, easier, and there's more money in the insurance. So we're going to bypass suing the person directly. Let's go after the insurance policy. The most common that I see for liability is doing $500,000. It's not that much more to bump up from the basic level to do $500,000 worth of coverage. But let's go back to the scenario where your friend's cutting up lemons with you. If they cut their finger, there's actually one other coverage called coverage F. That is MedPay or medical payments. Normally, the default is $1,000. A lot of people do $5,000. Same scenario. Friends over, they're cutting up lemons, they cut their finger. There's a deductible that they have to meet for their medical insurance. Maybe it's $1,000, maybe it's $2,500. But if you have either $1,000 or $5,000, you're common. You're going to have enough coverage to pay that medical bill without having to have them go after your insurance. It makes it simple and easy to deal with. If money is a major factor in the home purchase, then I would look at the different coverages. Personally, what I would do before you dive into any of these changes, I would try to quote your policy and make sure we get all the coverages that you should carry. And we'll explain the additionals that I would recommend as well. But the thing I would personally look at to save you the most money is do a larger deductible. If money's a factor, instead of cutting all the coverages and getting $100,000 less here and $50,000 less here, let's just raise that $1,000 deductible to $1,500, maybe $2,500. Honestly, some people do $5,000 or even more just because they can afford to pay that if something happens. They're only going to use the insurance in a major occurrence. What felt like a very large deductible is not as much compared to what they're going to have. If cost isn't a factor, then sure, keep the default, which is the $1,000 deductible, and decide what's best for you. So let's talk about some of the additional pieces. There's a couple pieces people don't realize isn't covered on your insurance policy, and these are very important. One of the major pieces that I see a lot of agents missing is that they don't add water backup. If a pipe burst, you're fine. That's under coverage A. If it's sudden and incidental and it hasn't been sitting there for 3 weeks with the water all over the place, you're probably fine. As long as mold's not growing is typically the best determination. There are other ways, and I can't legally tell you that that's what an adjuster does because it's up to the adjuster that decides that, the claims person. In my 12 plus years experience, that is the most common scenario. If it's just a pipe bursting, that's one thing. But let's say your water backed up. If the toilet overflows, if you've ever seen a toilet that bubbles, that usually means there's an air hole somewhere in the lines, and that could cause the toilet to overflow. If the sink overflows for some reason, that's something that's typically excluded from an insurance policy unless you add water back up. The other piece is probably the most claim policy, and you'll notice some of these companies, they say we got a cheaper rate, but a lot of times they usually change the roof endorsement. If you have a nice roof, if it's newer, you may not have to cover a lot. But again, you could raise the deductible so that you have a larger portion to pay, which brings the price down. That doesn't change the fact that some roofs are called scheduled roofs. Be very careful with this coverage because if you schedule a roof, that means every year that policy is enforced, the roof is worth less and less coverage. A few of the larger companies out there do those scheduled roofs. I've seen a handful, and what they normally do is, let's say the roof is 10 years old. Well, you're only getting 60% coverage. So you're on the hook for a $10,000 roof for $4,000. You may even have to pay your deductible on top of that, which at this point, what's the point of having the insurance or even filing a claim because it's not giving you any value? Yes, it's a little bit more expensive to do what's called replacement cost or matching. The replacement cost is going to just essentially what we said. If there's a major problem, doesn't matter. They're replacing the roof without you having to come out more than that deductible. The matching is an additional piece that you can add, or sometimes it's just allowed to where if they can't get the exact match, the color, they'll match that. So they do that with roofs and siding. If the siding on your house is 15, 20 years old and the new version of your siding is the same color, but one's really bright and one's really dark, that doesn't look good. You don't want to come home and see your house just a weird looking color. In those scenarios, if you have that matching coverage, they're going to just take off the old one and just fully replace the siding. Same thing for the roof. If you have that matching coverage on the roof, they're going to take off what they can't match and just do a whole new roof if they have to. But Mark, you're making this really expensive. If I add this matching and I add this replacement cost and I add this, I'm going to pay like $5,000 for a policy. You would be surprised if you find the right company. In our agency, we work with a handful of companies. So when we're working with multiple companies, there's different fits for each scenario in each location. If a good company doesn't have a large loss in that area and you have a good fit for them, they're going to give you the best price. And when you have an agent that can shop that, they can do all of those additional pieces, sometimes cheaper or even the same price as another company that doesn't offer that because they have higher losses and they've had issues with that. I know the video's kind of long, but I want to give you one last piece of advice. A lot of things that you got to think of is high value items are normally have some sort of exclusion. What we mean by that is the insurance companies usually restrict the per item cost or value. Mainly jewelry, mainly paintings, mainly fur, mainly coins, and money. So those are the main things that we see claims on to where there are limitations, mostly $1,500, sometimes $2,500 per item is the cap. If you have a lot more jewelry and you're not going over that cap, then you may want to look at doing what's called a blanket coverage. If you have specific valuable items that are $10, $12, $20, $30,000 rings and watches and necklaces and things like that, you need to schedule those. Scheduling is just a fancy word of saying I'm adding this separately onto my policy. If I lose it, it's stolen, something happens, then I want that covered for the $22, $28, $30,000 value that it is. It does get a little bit complicated if you go over $25,000. If you have valuables over $25,000, most companies will make you show an appraisal to prove the value of that item. Every 3 years, they're commonly going to ask you to show proof that that value is there. I'm not going to dive too far in because there's different versions. There's in vaults, out of vaults, if you keep it in a bank, things like that. But those are very few and far between that you see that. Yes, we've dealt with that a lot, but it's very uncommon. Same thing goes for my computer. I have an additional coverage on my camera. and my computer equipment, because that $1,500 isn't enough to replace my kid's computer, my computer, all of these specific items that I've had made for them. So if you've got a really valuable item, check with your agent if that needs to be scheduled on top of the policy that you currently have. Same thing goes for guns. If you have a lot of guns, there are a few companies that have a zero limit, so you can just max it out and you're good. But there's other companies that only let you go up to a few $1,000s worth of guns. Now, all my friends that have guns typically have a crud ton. I've yet to get one, but they're trading them like candy. That normally needs to be with a specific company. Otherwise, you need to add specific coverage for that if you think that the guns have a high value and need to be covered in a scenario where you may have a total loss or a major fire. That's about all I think anyone has attention for today. There are other things. If you have questions, put them in the comments below. I'd love to answer them for you if I can. If you are interested in finding out more and actually getting a quote from us, I'll put that in the description below. Yes, there's golf carts, there's all sorts of specialty items, there's additional replacement costs, which I wanted to mention, is if their houses has a higher value than what the estimated rebuild is, because we don't get to pick that. The insurance company decides the rebuild cost based on the square footage. And if we think we want more, we can add additional. So it's called a full replacement cost addition. If we have 25%, 50%, sometimes just the full value regardless of what it is, you can add those on as packages. In the end, the agent that you work with does make a huge difference to give you the coverages that you need. If you are curious about what a total loss claim looks like, go ahead and check out the interview we did with one of our customers that has had a total loss of over $400,000 on their policy. Great interview, shows you exactly what the process was and what to expect if you have something like that. If you're just looking for more information on different types of insurance, maybe check out our Car Insurance 101. It's very detailed just like this, explains the Michigan style of coverage because our coverages are very different. I hope this was helpful. Like, subscribe, all the fun stuff. I'm Mark W. Flockhart. I'll see you soon.